What's going on, everybody? It's Jeff here. Welcome back to the channel. Market finally rebounding a little bit today. In this video, I want to talk about the Financial Services Committee meeting, what they talked about and how it relates to AMC. At the end, we are going to go over a stock that really shook retail investors today. I'm going to talk about where that ticker was first originated from, how it began to pump up over 1,000%, and then where the downfall occurred. So let's get right into it. First off, let's take a look at the notes today. It was titled "Wall Street's Cop is Finally Back on the Beat." During their meeting today, they really talked about one main topic, and it was leveling the playing field between institutional and retail investors. And while I do not think that anything is going to be overhauled in a dramatic way or in a very, very quick way, the fact that they're still talking about level the playing field months later when this topic was first originated is a very good sign for retail investors. Whether you look at this or short-term or long-term is completely up to you, but it is a very good sign for retail investors. One thing that I have my focus on is this right here. This is AMC traded over the dark pool. It talks about over the past 20 days, the average volume is 63%, and today it was 68%. Now, if you're unfamiliar with the dark pools, it was created for large block trades to be able to be traded. And for example, if you want to sell 10 million shares of a stock, you want to get rid of all of it. The stock price is $35. If you were to just dump that out, by the time you actually got rid of all of your stock, it would have been down to that $25, $27 level. And if I was a retail investor holding that stock, unbeknownst to this massive sell, I'd be very upset that my value had tanked so much. So that's why they've created the dark pools. However, here is my dilemma. And the difference in this is very vast. When you look at large block trades, which are often represented by institutional trading, it only accounted for 5% of the volume all day. So 5% of the volume was block trades. However, 63% was on the dark pool. This is a main focus for them. They're really trying to figure out exactly how they can wrap this up and monitor this going forward. So keep that in mind. As far as where exactly AMC stands, it hung around pretty good today. It stayed very little bit green. We are channeling very nice in between that same point. The IV is a lot lower. The range that we have day to day is very small. We're not swinging into the $4 or $5 between lows and highs. It's very small. I think today was just under $2. And even on some other days, it's been about $1.25. I've covered it. But we're hanging around that $37 to $38 price point. The same way we hung around that $9 and $10 price point, except in this case, we're 400% higher. IV's low. The MACD is starting to curl. So a little bit of buying pressure is going to get this thing to go back up to the upside as we continue to make higher lows. And our bases are above that $32 price point, which where it first lasted. So we're going to continue to monitor this where this is going. Now, next, I want to get into this stock right here, CEI. A lot of people were absolutely shocked by this. Now, if we zoom out to the 30-day time frame, we're going to see that it was hanging around 35%. And in the 1st of September, it was hanging around 50 cents. And it ran almost 1,000%. Well, this stock ran because, one, it was pushed by a lot of influential people. And it also ran in the energy sector. As we know, oil is going through the roof. There was actually a day a couple days ago where every single sector was down. Tech sector was getting murdered, but the energy sector was absolutely thriving because of oil prices so high. And it began to be choppy. It reached that high. There was a $3 price target on this. Then as it went up, it went to a $5 price target. Then as it went up even more, it went to a $10 price target. And slowly, as you can see where I'm going, once it hit $8, $9, it would have went to a $20 price target. It continues to go higher and higher and higher. And a lot of people get to think to themselves that it could just keep going and going and going. And the fact that there's never going to be a time for it to pull back. There's never going to be a time for it to come back and cool down. You look at AMC when it got up to $70, $72, and now it's hanging around that $40 price point. It always needs time to come back, cool down, find its new base in order to be able to make that next leg up. However, this one is a little bit different. This one does not have the fundamentals like AMC or GameStop have. This is what is also known as a pump and dump. Now, I'm not saying this cannot continue to run. It might not go back to $5 or $10. I'm just saying of exactly how this stock was originated because I've been around so many of them. And very quickly, a few days ago, I think it was last Thursday, I'll jump over to that 5-minute time frame. It had a couple down halts and it went all the way down to that $3 range. And I said that $3 range is holding a nice support. Had a little bit of a bounce up. It tried to test, all-time highs again, did not make it, and it slowly began to sell off until today, which people were continuing to buy this stock. And if you want to buy this, scalp it, that's fine. You could buy it at the $3 range, scalp it for a 20% move. That's absolutely fine. But today it was released by this company. It's Carousel Capital, which, by the way, is not like Iceberg Research. Carousel Capital is actually a very sophisticated and noteworthy short selling company, and they came out with this tweet, which is very in depth, talking all about CEI, the delinquent filings, and some of it might not be true. However, this one had massive reverse stock splits, and you can go and continue to look at it. And it was followed by down halt after down halt after down halt, followed by a little up halt, and then eventually a news halt as the CEO tried to talk about exactly what was happening and defend its company, which I think the news halt came out a little bit too quick because there's no way you have enough time to be able to gather evidence to be able to defend yourself. It began to pop back up and it slowly began to sell off. And like I said, I don't know where exactly the stock is going to go, but this is a very good point to one, wait for time to follow your due diligence. For those of you that have jumped in an AMC very early on, you understood the play. It consolidated that $5 price point. It ran all the way up to $70. We're consolidating back at $40. The play still stands. For those jumping on a stock that just gets talked on all on the internet, just remember that this is exactly what happens. It goes up, it gets pumped, and it starts to go down. And then a lot of people continue buying on the down. They call it buying the dip, but inevitably you're not buying the dip. You're just buying on the downturn. And like I said, I don't know exactly where this is going to go, so I don't want to come out and say, oh, just get rid of it, or I'm not telling you exactly what to do. I'm just saying this pattern happens all too often. It gets ripped up and it comes right back down. And I've seen many of these plays happen before. So just keep that in mind when it comes to why you're getting in plays, what your expectations of a play are. Like I said, it ran 1,000% in a very short period of time. If you got into this under $1, there's no way that anybody should ever be read on this. If you got in this at $3 and it went up to $3.50 and you're not deciding to take any profits, those are the risks that you're going to take going forward. Like I said, I'm going to say it again, not all of these plays are going to run like AMC and GameStop. They are very unique in so many different ways. So just if you got burned by this play, if you've been burned by other plays, just be very vigilant on how you're entering, why you're entering, where this play even came about. It only takes a little bit of searching on the internet. I've talked about this before, to be able to do a little bit of research and say, well, who first called out this play? Why are they investing in this play? What's their average price, to these plays? Am I getting into it when it's a little too late? Somebody reached out to me and said, I think it's a little bit, too late to get into it. And in my opinion, well, anytime a stock runs that high in a short period of time, it needs time to cool off. So just keep that in mind going forward. I want everybody to win and learn as much as they can while they're holding on to their AMC and waiting for it to do its thing. So that's it for this video, guys. I'll see you in the next one.